In this video, I'll be sharing with you a sharp sniper entry strategy. First, you need to determine the trend of the market. So this is a 4-hour time frame, and price is giving us a lower low and a lower high. So you can see how that continues. So this is a typical downtrend. So you can see that the last one we had was this one, lower low, lower high, and a lower low. So that was our last price movement. Now, after you have determined the trend of the market, the next thing is for you to determine your range. Your range is the last structural movement. So after this lower low here, the next one we had was this lower high and this particular lower low. So it simply means that your range for this trade is going to be this last impulsive movement. So this movement is your range. So in this range, you will identify where this range takes away liquidity. So if you look at this carefully, you realize that there's a liquidity that was sitting here, and again another liquidity was taken at this point. So obviously you had this candle that take away liquidity. So now that you have identified a candle that takes away liquidity, the next thing is for you to mark out that particular candle. So this candle takes away liquidity. So you marked it out. So you see how I've marked out that institutional candle. So what is the next thing you want to see? You are not patient enough for price to build back. So price went up, price came down, and then price built back into that zone of liquidity. And immediately price came into this zone of liquidity. All you need to do is for you to move to your lower time frame, either your 1 hour or your 15 minutes. So look at what happened. Beautifully well. This is 1 hour. So when price came into this zone, what do you see? Price gave us a bearish hammer or a pin bar. So that pin bar here that you are seeing becomes your sell entry. Do you see that? Your stop loss that is your stop loss. And now you can see how the trade plays out perfectly well. So that is how far it went. So you look at it, plays out all the way after this candle formation, and then it plays out all the way to this point. So you can see that beautiful price movement. You can see again price came into that zone, and then it was ranging down to this side. So it is very simple and a straightforward pattern of trading, right? You determine your trend. After you have determined your trend, you identify your institutional candle in that range, and your range is that last impulsive movement. So here was a liquidity that was taken, right? And after that liquidity was taken, you mark your institutional candle. Your institutional candle is that particular candle that took away liquidity. So you mark it out and you are calm. You need to be patient. You can see the price took days to return back into that zone. And when price gets into that zone, you move to your lower time frame. 30-minute time frame, you can see that returning, and you get a candlestick confirmation. Beautifully well, you sell, and the rest is history. So this is very, very effective, and it works across all time frames. So let's look at how we can do this on gold USD. Alright, this is gold and this is a 1 hour time frame. Let's look at our 4 hour time frame. So you can see that this is a 4 hour time frame, and so far so good. Gold is bearish. So in this case, let's look at 15-minute time frame. Okay, market is fractal. It will always give you the same thing across all the time frame. Look at what happened here. Here price has been on a downtrend, lower high, lower low, right? Lower high, lower low. Then price pushed to the upside, and what happened? Here becomes a break of structure. So you see here is our BOS, which is a break of structure. So after price break structure, you realize that we had all of this movement here. So this is our last order block that brings about that movement. So what do? We kindly mark out the other blocks. So that is the other block, and we are expecting price to pull into that zone. However, if you look again, we have additional point of interest. Aside this other block, if you look at this zone, we have a fair value gap. So that is another point of interest. So what do? We mark out our fair value gap. So do you see that? So we have 2 points of interest. First, our order block. Then this, our fair value gap, which is an imbalance. So look at what happened. Do you see that? Price return back and fill into 50%. Oh, this fair value gap that we have marked, 50% of it. And when price retests that 50%, we had this bullish engulfing candle, and immediately from there, price begin to push to the upside. Look at that. Price never returned to that zone again. Do you see that? Very simple and straightforward. And I believe you have learned something. Do not forget to give this video a like, share, subscribe, turn on your notification to be the first to get notified when we upload our next video.